Welcome to the show. Pete Belcaster and Joe Brett, the real estate guys, with you. And thanks for being with us. We're both real estate brokers licensed in the state of Oregon. I'm with John L. Scott. Joe's a broker with Remax Ideal Brokers. We get together with you every Saturday morning here on KMED to talk about all sorts of real estate related issues to Jackson and Josephine County in Oregon and the country. And well, gosh, almost 5 years now. Can you believe that? It's a lot of Saturday mornings we've spent with so many of our guests, like today, huh?
And it's the best thing that we do is bring in really smart people who really know their stuff. And lo and behold, we've learned quite a bit on these Saturday mornings ourselves on the real estate show.
People who've been with us, gosh, we really have. Of course, our goal is we want you to be a good, smart real estate consumer because it's going to be these are the biggest investments of your life, the amounts of money we see in our real estate businesses with people we deal with, and how emotional this whole series can be, and it takes some time and patience and all sorts of things. And so the best thing is to be well informed. Yeah. Well, I don't know about you, but I've been talking with lots of clients lately, and I'm telling you, we talk about loans, and I'm not the loan guy, and I'm a broker guy. I can talk about houses, and I can tell you what loans are out there, but you got to start somewhere. And I always tell people, we got to start by, you got to know how much you've got, what you've got available to spend, what we're looking for before we're going to go tropsing around, looking at properties. And you got to start with Sandy Boughton and Coach Jim Palazzolo at Mortgage Express. They've been doing this a long time. Sandy's in the house today, and she's come off the mountain, off the ranch. And
Good morning.
I love it when you get out of here on Saturday morning and come down here with us.
Yeah, it's a blast. Actually, this morning I had an early appointment at the office, and I've got a couple more appointments today. It's just kind of on fire right now.
So I asked you that when you walked in here, and I said, how are things? And you said you're busy in heck.
I am. I'm really busy. But usually what happens is, people go out, they see a house they like. They're driving around on a Saturday, heading to a baseball game, doing whatever it is they're doing, and then there it is, the house. I really like that house.
I like that
Look
house.
At that sign.
That house talks to me.
I think I'm going to call the realtor.
Uh-huh.
Some people who are familiar with the market, they know their realtor, say they know you guys. So they're going to call you up and they're going to ask you about it. But some people don't know a realtor. So they call the person on the sign and they say, hey, what is the purchase price on this house, or what is it? Can we see it? Is that not how it first goes?
Absolutely.
Right?
I love this house. Show it to me.
Yes, exactly. I want to see the house. Yeah. So, of course, you guys jump out of your pajamas, run down there, show them the house, right?
Right.
But that's not where you're supposed to start. Where you start by seeing a mortgage broker and seeing what kind of loan you can do. So usually that's what happens. They go see the house, they're in love with it or not in love with it, or they want to see other houses, and the realtor says, you need to get pre-approved for a mortgage loan. So then the people come in and see me, and we sit down and we take a look at all of their paperwork. So typically I say, this is what we're going to need. I get a feel for their situation. Do they currently own a home? Have they filed for bankruptcy before? Just a few questions, just some basic questions. And then we sit down and we get to the bottom, to the nitty gritty. And we talk about loan programs and credit and all of the things that are important in getting pre-qualified for a mortgage.
And you have to remember, because if you find the house that you like, and we've all been in this, you've been in this situation, you find the house you like and you're not ready, you don't have the pre-approval letter or the letter that say you can close the loan to the seller wants to know you can close that loan. If you don't have that, what happens? Someone's going to come and get it from you. I've seen people lose the place that they really wanted because they weren't ready for it.
Right.
And that's the lesson you learned back when I was, we were new realtors about 8 years ago. Yeah. That's what you learned right off the bat there, because unless you have the pre-approval or some document to submit with your offer is really is just going to be moot, I think. Who's going to believe that?
Right, you've got nothing in the game at that point, and your gun's unloaded.
And ultimately, you're guessing, what is my payment going to be? You're like, think you can afford that $189.9 or $249.9. I mean, you just have an idea in your head, or maybe what interest rates are. You see that sign at the bank as you're driving by that the rate is this as of today. And it's different for everybody. All loan programs are different. Interest rates are different. Payments are different. So when you get pre-qualified, not only are you able to issue that pre-approval letter, mm-hmm. but you're also able to walk into the house knowing how much it's going to cost you. how much money you need out of pocket. What's going to be left? Do you have money left for carpet or for blinds if you need it? Mm-hmm. So that's there's a big things that happen with the pre-approval.
Mm-hmm. What are you seeing coming through your door right now? I mean, who are applying for loans? Because, I watched the MLS statistics on, showings, on properties. When you go with the realtor, you have the lock boxes, and they keep tracks. It's amazing. It keeps track of all that and how many. And it's kind of on a low end. It's around like 100 a day. It varies, it goes up and down. So I don't know how busy that part of it is, but it seems like if this is true, and what Sandy's saying, that people are gearing up.
They are.
For the spring season, it sounds like to me.
They are, but what I'm seeing more of is people that have come in several months ago and gotten pre-qualified, or even 6-8 months ago and gotten pre-qualified, and they've been looking, and they've been looking, and they've been looking, and now they're finally finding something that they like. Mm-hmm. So now they're ready to actually get started. Mm-hmm. That initial pre-approval saves us so much time, saves us so much energy when it actually comes down to when you do find the house that you like and you can afford it. Mm-hmm. Because you've already gotten most of the paperwork out of the way. You already know what kind of a loan you're doing, and you have a letter that can be issued when you write that offer.
Yeah.
Which, correct me if I'm wrong, I think you have to have a pre-approval letter in order to write an offer.
Well, it says in the documents, and these are some of the arguments you have when you get the document says you have a certain amount of time you have a certain amount of time after the document's approved to apply for the loan, kind of thing. But it's too late. You got 3 days. In 3 days, you may not be able to do that. Right.
Right.
All right.
Some approvals are really quick, and some of them take a little bit of time. So someone may come and see me, and maybe there's something reporting on their credit report that they didn't know was there, or something that they didn't pay, and it's just still negative on there. Mm-hmm. And they may have a little bit of cleanup to do, or maybe they need to save some money for closing costs or for earnest money deposit.
Yeah.
I mean, there's a lot of 100% stuff. We got the VA and the USDA. I'm doing a lot of USDA right now.
Those are such good loans.
They're such awesome loans.
Well, in rural communities, I mean, think of this. If the USDA loan program, the Rural Development Loan, was not out there, what do you think real estate would be happening in towns like Klamath Falls, in Roseburg, and Grants Pass, where the economic situation is so much worse than it is in Jackson County? In fact, and I don't know if this is true, but I hear people saying that the vast majority of loans in those communities are USDA loans. Is that
I would imagine
so?
I mean, it's either USDA or conventional. And when you compare FHA is great for a lot of reasons. It allows for some flexible guidelines in underwriting, gifts, down payment. It's a little bit more flexible, more of a manual underwrite. But when compared to other loans, the USDA is just a much lower payment, less money out of pocket. It's just a better option for the borrower.
And I just saw this week that the USDA boundaries are going to remain
as they are
for right
to
now.
The next census in 2020.
Right.
Yeah.
Yeah, to the next census. So they were talking about taking towns like Klamath Falls, Grants Pass, and Roseburg, the cities parts of those, taking them out of USDA as well as Ashland, for example, and that would devastate those markets.
Yeah.
It would devastate the markets all over the country. I think that's why they stopped that.
Ashland would be fine, but Klamath Falls and Roseburg,
Ashland would be fine.
Yeah,
and there actually is a section of Grants Pass that's not eligible for USDA. But it's just like Central Point. The city of Central Point's not, but the outskirts are.
Right.
So,
and I'm amazed. I tell people about USDA loans, and they go, "Huh? USDA? Huh, isn't that the meat people?"
Yeah, it is.
And I go, "No, they actually have a rural development loan. It's 0% down." And they look, 0% down? No, I never heard of that kind of thing.
That opens the door sometimes.
Sandy, what does it mean when 0% down? Because you got to have fees. Someone's got to pay for this something. I mean, so what does it mean when someone goes, "Hey, I got 0% down here"? And what do you tell them? What do you say to that?
Well, you still have closing costs. You still have to have a little bit of money for earnest money and for inspections. But it just means that you're financing 100% of the purchase price. So you're financing what you're buying the house for.
And of course, those types did USDA require the house always has to have an appraisal and all of those kinds of things, right? Does USDA have loans that you can fix them up, or do they have to be in certain condition? Do you know that?
Oh, they need to be in the same type of a condition as a FHA home. They need to be in good standards, according to the Federal Housing Administration. So safe and livable is usually the words I tell people. It's got to be safe and livable. A broken window, that's not safe. Some exposed electrical, that's not safe.
No.
Those are some things that would need to be fixed before the loan went through.
Before the loan goes through.
It's the Homepaths that have some of the renovation loans that can include repair costs in the process.
Those are the federal backed loans that they're trying to move out, and they're offering you chances to fix them up.
Right.
Homepath and HUD.
Yeah.
Those are the two that do that. Well, what I like about the USDA loans, and this was a program, the Congress stopped it for a short period of time. Remember, they didn't fund it. And what they ended up doing was adding a 2% loan charge to the loans now. And that pays for the entire program to keep it still at 0%. So the taxpayers are not banking these USDA loans. The loan people themselves are doing it. And the one thing I remember, one of the classes that I was in was that USDA loans, and these are rural loans, remember that, they have the lowest default rate of any federal housing program in the country.
That's awesome.
Isn't that amazing?
That's great.
I think that's so cool.
It helps a lot of people that otherwise don't have $8,000-$9,000 to put down on a house to get into a house and own a house of their own, usually for less than what they're renting for.
And that tells you how much they value that home ownership.
It is.
They don't default on those loans. They get in and they stay in, and they do well.
We're talking with Sandy Boughton from Mortgage Express today on the Real Estate Show on March the 1st. And it's always good to catch up with Sandy about mortgage interest rates because they're really interesting. Are there any more programs for first-time home buyers? When a few years ago, remember, how many shows did we do, Joe? We had tons of first-time home buyer programs. Is there anything out there that people might want to consider going to? Or are they all gone?
Well, when people talk about that, I think the first-time homebuyer program that comes to mind the most would have been that
$7,500.
Yeah, get cash back from the federal government and buy a house, all that whole deal.
Yeah,
that was only temporary, and really all of these programs have first-time homebuyer abilities. Like the USDA rural housing loan, you can't own another home. There's no rule about how long ago you owned your last home, but you can't own another home and you need to be within the income limits. But even like Homepath, for example.
What are the income limits? Do you know those just to tell people
they're
what those are?
right around $75,000 for total household income limit. Now, that's a little bit flexible. If you got mom living with you, you got kids in the house, those are deductions, and that can go up.
Okay.
Right.
All right.
It's about $500 for every person that's living in the house.
Okay. All right.
Yeah. So that's the USDA. But as far as first-time homebuyer programs, no, there is some down payment assistance programs and some grant programs that you can take through Access Home Lending, and you can get pre-approved for certain types of programs that help you save for down payment or assist you with your down payment. But there isn't necessarily any $7,500 tax credit out there.
Right.
Now, Homepath and a lot of REO properties, they do allow people who are going to be occupying the home as their primary residence a first choice.
You get
on
first
the offer.
choice.
Right. For 15 days, only owner-occupied people get to ride an offer.
And that has been cut in half. Remember that? Because it used to be 30 days for owner-occupied or first-time home buyers before investors got in, and they've changed that. 15 days.
The market's hot. I mean, we're seeing multiple offers. If there's a good deal out there and it's in the price range for a lot of these first-time home buyers, it's a multiple offer situation.
Yeah.
And I think that's the thing, guys, is there's a lot of people out there that want to buy, but they just can't find what they're looking for because we all know there's just not very much inventory, right?
And inventory, actually, from a year ago, it's up. But it's still, traditionally, it would be down.
Yeah.
But I've just heard more people think, and I don't know why they're thinking this, but maybe it's true. And Sandy may be backing it up that the spring is when. What is it about spring and home sales and optimism or something that pushes this? Is that what?
Yeah,
is this a cyclical thing that goes every year? You go through this, right?
It's a good time to make a change. I think it slows down a little bit around Christmas, and then in January, people spend money at the holidays, and they're not necessarily thinking about moving. They want to get their tax returns filed, and then once that's all done, hey, tax refund.
Yeah.
That is the ultimate down payment.
Yeah.
Use that for closing costs or earnest money or inspections or new carpet, whatever it is.
Yeah.
So tax return time is, I think, a big driver of of purchasing market
And
for
you know,
sure.
You think about it, you show properties to a lot of people after work during the week, and it gets to December and January. I mean, it's 5 o'clock. It's dark.
It's dark.
And I can remember shining headlights into homes on winter nights because the electricity was off in a foreclosed home and things like that. So
Yeah.
it's just not conducive.
It's warmer. You
Yeah,
want to go
it's
out.
just not
You see stuff.
It's cold and cruddy.
Think,
and,
hey, I could live there.
yeah.
Well, they're out there, and we're going to see more of them come on. Well, we had Laurel Adams, talking about rental properties, and there's simply none. 3-bedroom, 2-bath houses, they're simply not out there.
Right.
There is, it pushes prices up. Same way with houses. You got to have variety. You got to have them out there. You got to have at least 6 houses for every buyer, and we're down to I think it's 4 in Jackson County. So we got a ways to go there for inventory. Hey, it's the Real Estate Show. We're with Sandy Boughton from Mortgage Express today on the Real Estate Show. The show will repeat at 2 o'clock this afternoon, and all of our shows are at realestateshoworegon.com. Don't you dare go away. We're coming right back after this. Welcome back to the Real Estate Show on KMED. It's Saturday, March the 1st, 2014. Pete and Joe, the Real Estate Guys, with you today, and thanks for being with us. Hope you're going to have a good weekend coming up. A little rain, little wet. Immigrant Lake did, by the way, come up quite a bit. It's amazing how when you get rain, how much water really comes down. It's not like California, though. Wow.
The NOAA website has got a picture of Lake Shasta that it uses to emphasize the drought conditions down there.
Yeah.
And there's more land than there is lake.
Really?
A picture of Lake Shasta.
Yeah.
It's right there at Bridge Bay, and it's amazing how low Lake Shasta is.
Yes, it's Mother Nature works in strange ways. Well, we're still not out of the woods, and still at the end of the show, we'll give you some of those classes that the Jackson Soil Water Conservation District are going to be offering to deal with some of this stuff coming up a little bit later on. Today, we're with Sandy Boughton from Mortgage Express. She's our resident mortgage lender expert here on the Real Estate Show. 770-5633, by the way, is our telephone number if you want to join us for a question for Sandy. Anything about mortgages, I mean, she's like the person to call. So 770-5633 is our number during our live show this morning. Now, I noticed, Sandy, lots of, we've been noticing here on the show, a lot of Homepath, properties come on, foreclosed from Fannie Mae-backed properties. These are different from FHA-backed properties, which are HUD homes. These are all, oh my God.
There's so much to remember.
It's just amazing. Anyway, Homepath homes are foreclosed properties, and I'm seeing just bunches of them coming on in Jackson County. I'm on the list that gets them when they come out. I mean, there was one, there were like 7 of them on there just one day come on.
Yep.
Last fall, we'd have 3 to 5 a week would show up, and now we're getting those 7 and 8 in a day.
Yeah.
Sometimes.
It did slow down for a while.
All right. What about Homepath? I mean, these are properties now. I did not realize that there was a Homepath loan kind of program there.
Man.
Okay, so so what is a Homepath loan?
A Homepath loan. Let me start by saying, Coach and I were the very first lenders in Southern Oregon to ever offer Homepath financing.
Okay, that's why I haven't heard it. Okay, I'm hearing it here first.
It is hot, and we still do it, and we do it through Mortgage Express. It is a great loan. It is a specific type of loan for Fannie Mae owned homes. All these homes can be viewed at homepath.com.
Uh-huh.
So Homepath properties are basically homes that used to be serviced or had a mortgage through Fannie Mae, and then they've been foreclosed, and now the bank has taken them back, and they're putting them on the market for sale. Because they are Fannie Mae, the mortgage giant, they offer their own type of financing, which we do through Mortgage Express. This financing is amazing. It really is. And in comparing it with conventional loans or FHA loans, it is a really hot commodity.
All right. Actually, I've not heard this. So this is interesting news. Okay. Why is it so good then?
It's so good because the underwriting guidelines for down payment are a little bit more flexible than conventional. It is 5% down minimum for owner occupied, but there is no mortgage insurance on this loan at all.
And FHA requires 1% of the total for mortgage insurance?
It's actually higher than that.
Higher than that. Okay.
And then also, conventional requires mortgage insurance.
Okay.
Every loan
Everybody
requires
does.
mortgage
Okay,
insurance.
yeah.
Unless you have 20% down, you're going to pay mortgage insurance, except for with a Homepath loan. Oh, and a VA too. But Homepath loan has no mortgage insurance, and they don't require an appraisal. So there is no appraisal required at all,
Okay, now someone's going to ask, why would they not have an appraisal? And the answer is?
The answer is because Fannie Mae has already done their research on what the market is and what the house is valued at. And they've already done their research on what needs to be done to the house, if anything. And a lot of times they'll go out, the real estate agents that are marketing these properties will go out and have work done to bring the home up to standard so it's ready to go.
So I'm looking at homepath.com is the website where you can see these places together. I mean, they're also on the MLS, but they're not listed together. So I'm looking at one here, Sandy, at 2356 Maple Park Drive in Medford at 154,000, 3-bedroom, 2-bath, 1,350 square feet, single family place. So tell me, I look at this at the website, and it's telling me a number of things there about, it says 11 days left. So that's the time. As for owner-occupied, still get first crack at it,
These are the
correct?
things you want to look at. So for this particular listing, you'll see it says first look, and it'll have a remaining time. That first look means that they're leaving the period open for primary residence borrowers first.
And that's what you do, right? You do that, but you provide the loan for this.
I'll provide a loan for a primary residence or non-owner occupied. I mean, no matter what it is. But basically, for the first 15 days that the house is on the market, if you're going to live in the house, you get the right to make an offer before someone else who is not going to live in the house.
Okay.
So for 15 days, they're going to say, okay, anyone who's getting a loan or paying cash and is going to intend to live in the house, and they double check this, has the right to make an offer first. So that first look period, owner occupied only.
And they're not going. Is it like HUD then, where you're not going to know until the end of the 15 days, and then it's like the highest net to Fannie Mae is going to get the bid if there's multiple offers?
I think that would be a question for a Fannie Mae agent.
Okay.
But I don't think so. I think that the agent looks particularly at, the terms of the loan, what the borrower is requesting.
Okay, now that would be really different from a HUD acquired home.
Or
Yeah, they're not
doesn't even
comparing.
see the offer.
I think
Where
it's
you
treated.
don't even see the offer. The offer just goes in, and they say it's the highest net to HUD gets the home. Period.
No,
But this
that's
is
not
different.
the case. Absolutely.
Wow. Okay.
So this is more like a regular sale.
Right.
And
Okay.
you've got your agent on the other side choosing between multiple offers that they receive in the same day. They're not going to take 15 days and pick the best one out of those deals.
Okay.
So you get your offer in, and you could be the first one on the day that it comes on the market, and you could get a pending sale.
So they would. So if I put 15 days left on that thing, and I came in with an offer the first day, would they take it off then if they accepted it and accept the offer and
It'll
go
show
on?
pending.
It would show pending, and you
Absolutely.
can do that in that 15-day period.
Yep.
That's very
So
different.
that's the first
good
thing
to
you
know.
look for.
I mean, that's really good to know.
You look for your first look, because if you're an investor, you can't make an offer on a first look house until that period has passed.
Okay.
And let me tell you that the playing field is much more level because of that.
It
Because
is.
investors can come in and put
I know.
a couple extra $1,000 down that a primary home owner wouldn't have to put towards the deal.
Yeah.
And they already know the price is priced pretty aggressively. That's why they're not worried about appraisals, because they've already done their research on
They've
the
done
market
their
price
research,
Right.
and it is priced aggressively.
So
So
it's really gives a level playing field to the owner occupants off the top.
it does. I think that's a great thing to do.
Yeah.
So
Well,
then
remember
that's the first thing you look for.
That's what we want. Is
Well, the
owners.
federal housing programs are designed for owner-occupied first. I mean, that's the pushes
Well,
to
there's
have
less.
home ownership.
There's less
so.
of a default rate in it.
and less of a default
There
rate.
is.
Yeah, isn't
You're
it?
going to
Yeah.
let your rental go before you let your house go.
Yeah, absolutely.
So then the second thing you want to look at is this particular house. You'll notice it has two different little designations, if you want to call them that. Down below, it'll say Homepath Mortgage, Homepath Renovation Mortgage.
Right.
So this one is eligible for both types of financing. Okay.
Homepath mortgage, which is what you're going to do that for me.
Yep.
All right.
And I could do the Homepath Renovation as well.
And what is a Homepath renovation?
It's a lot like a 203K, and we would still
okay.
compare it with a 203K. So it's a rehab loan. So you could do either, but being that this one says Homepath Mortgage, that means that there's probably not a lot that needs to be fixed up on the house. It's in pretty good shape. You don't have to have any repairs done. It's ready to go with a loan, with no required repairs, no mortgage insurance, and no appraisal.
That's.
I know, crazy.
I
huh?
mean, that really is. I didn't even know that.
Yeah, it's great. And when you
mortgages.
compare this loan, the Homepath mortgage loan, with other loans, it is really a great option.
Yeah.
So don't leave it out. If you're working with a bank that says they don't do Homepath and you're looking at a Homepath property, you need to consider it. Make one more call.
And you said how many Homepath properties were there in Jackson County? You said there was like 40 something available right now.
Well, looking at it right now, looks like there's 41 in Jackson County.
And they've been coming on. So again, homepath.com, you can just put in, I just put in Jackson County, Oregon.
Right.
And it'll take you right there. And
You can look up city, you can look up anything. Now, if the property just says Homepath Renovation and doesn't say Homepath Mortgage, that's when you know that the house has something that needs to be fixed up on it.
Okay.
They don't do a property disclosure report like HUD does. They don't tell you what it is that needs to be fixed.
Right.
So you have to do your own due diligence, and you have to be prepared to be able to get a loan that is going to fix up the house.
Isn't it interesting the types of loans that come out by these federal programs to clear out this inventory of foreclosed properties?
It's great.
It's amazing. And there can be some great opportunities if you're smart and ready to go. Well, we're with Sandy Boughton from Mortgage Express here on The Real Estate Show. One more segment to go today. This show will repeat at 2 o'clock this afternoon, and all of our shows are available at realestateshowOregon.com. We're coming right back after this. Welcome back to The Real Estate Show on KMED, Saturday, March the 1st, 2014. Pete Belcaster and Joe Brett, the real estate guys, with you here today. And first weekend of March, and away we go. We've been talking with Sandy Boughton, our resident expert on all things mortgages from Mortgage Express. She, along with Coach Jim Palazzolo, are our experts here. And, you know, I'm just a little surprised today. I learned something every show we do. I say, oh, you do. I'm real honest to God. I mean, I've talked about all sorts of loans. You talk with Sandy and Coach a lot more than I have on shows. But the Homepath mortgages is intriguing to me. What an interesting way to do it. I mean, I like it. I mean, it makes a lot of sense to me.
It does make sense. And we always compare all different types of loans that are available for these properties, but this program is just a really great program. And I love, like we were talking earlier, about how they gear the financing for the owner-occupied people. And just like Pete and I were just talking about here on the break, if you look on there, you can also see that right now on any of those first look or owner-occupied properties, Fannie Mae is offering an incentive right now to automatically cover 3.5% of the purchase price towards the buyer's closing costs. So, hey.
That's amazing.
It's $3,500 on a $100,000 home.
And you can always...
$3,500, yeah.
Yeah, on 100,000, but we know that there's not very many 100,000s out there. So almost always you can cover all of your closing costs on these properties, which is amazing. And, you know, you can always ask the seller to pay closing costs on other deals, but they can always say no. So this incentive right now for owner-occupied buyers is pretty amazing.
So that special offer, I was going to say, if I go on homepath.com again, there's about 6 of them there, single families in Medford, Rogue River.
Yep, and there's more coming,
and
guys.
There's more coming.
Yeah.
Well, they've been coming on a steady stream. They were few and far between, Sandy, as you know, for a while there. We didn't see hardly any of them coming in. And all of a sudden, we're seeing a lot more. If everything is told us, there's still hundreds of vacant homes out there in Jackson and Josephine counties, in our counties. And at some point, they're going to have to come back on into this market, and they're going to be entering. And right now, we're seeing, at least at Homepath, but the interesting issue is that you can do Homepath mortgage loans on these properties.
I've always done Homepath mortgage loans. I pride myself in knowing my guidelines inside and out. And so when Coach and I found out about this program, I want to say it was about 5.5, 6 years ago, we went all for it, and we got approved for Homepath financing, and we've been offering it ever since. Now, it did slow down for a little while, and some of those things have changed. Like, for example, you used to be able to put 3% down on owner-occupied. Now you need 5% down.
Okay.
Now, you used to have to put more down for an investment property. Now it's less.
It's less.
You only need 10% down as an investor making an offer on a Homepath property.
Instead of
20 with
20%.
Conventional. Yeah. So 10%, that can make the difference between whether or not you have, it makes sense for you to buy it and fix it up and rent it out or sell it or whatever it is that you decide to do. But yeah, 10% down for investment property, 5% down for non-owner occupied, for owner occupied, and it's just a really great program.
And they pay your closing costs. That's a pretty good deal.
And you deal with the listing agent, not with HUD, as opposed to the HUD deals. You're not having to go online and go through the process of a HUD offer online.
You're submitted it to another real estate broker who represents
and your feedback and you get the word back immediately.
Yeah, you're working with a live person.
It's not that 10-day, 15-day clock ticking. You have to wait to get your answer.
My favorite line was, you can submit 15 of those things, and they only look at the highest net to HUD. I love that line. The highest net to HUD gets the house. They don't care.
Yeah.
And those HUD homes are great values too, just a little different process.
A little different process. We'll find out about the HUD homes next week. We've got Ann and Lori will be here.
There's what else you got? There's a little different process for every kind of a loan out there. And that's what we do, is we get you pre-qualified. When you come in, bring your tax returns, pay stubs, we take a look at the credit, take a look at the types of loans that are available for that particular person. Now, it's all going to depend on the house that they find. What if they find a house that isn't eligible for USDA? Or what if they find a house that isn't eligible for Homepath?
Right.
So it's really, we pre-qual, say, hey, these are your options. This is what you can afford. This is the price range you're in. And then when they find the house, that helps us determine what kind of loan we're actually going to do.
So you can pre-approve somebody, right?
Yep.
But you don't have to pre-approve them for a specific loan until they find what you're saying is the correct house that's going to fit which loan may work better for them then.
A lot of the times we pre-approve for multiple different types of loans.
Okay.
Unless, you're a conventional buyer with 20% down, then obviously that's your best option.
Right.
If you're a veteran and you're getting 100% financing, typically that's the best option. Mm-hmm. So the VA loan is just a really great loan.
Is that still? Oh, sorry. Go ahead.
Not all mortgage lenders offer all of these programs.
That's for sure.
And sometimes you go into a place and they say, well, I've never heard of that. We don't offer that. Well,
or I can't do that. You need to go see so-and-so in the office next door, but he's not available right now. So he'll have to rerun your credit. And then you'll have to do another application and meet with another person. I do all the loans. We do all the loans.
Yeah. Well, that's why I won't stop. I mean, but I like that idea that you can pre-approve you. You may end up. You go search. How long does it take you to search? Sometimes you may end up with a different type of loan, and that makes a lot more sense than just saying this. You're going to get this loan. I preview you for this loan. Yep. One size fit all. But maybe that really isn't the smart way to go.
It is not the smart way to go.
All right, we're going to be out of time here in a second. How can someone get a hold of you, Sandy? Because we send lots of people your way. They talk with lots of people. So how can someone find you?
You can always find me on the web. My personal website is sandyshomeloans.com. You can check me out at mtgxps.com. Call me direct at my office at 245-4526.
All right.
Sandy's Home Loans.
Sandy's Home Loans.
That sounds so homey.
I like it. It's a good spot. My cell phone number, my direct line, my email, everything's listed right there.
And of course, you guys' new office up there in, what is it called again?
It's Hillcrest Office Park.
Hillcrest
across
Office
from
Park?
Roxy Ann Vineyard.
All right. You're doing well up there as well.
Yeah, I love it up there. It's great.
And Morton's #1 sports bar. Voted by the People's
Quite
Choice.
diverse.
Morton's. We had Ken Hart last night come play for us. He normally plays at Callahan's, and that was a pretty popular thing. It was good.
Well, cool.
Good.
Okay, I just want to give you two classes from the OSU Extension Service on Saturday, March 8th. That's dealing with drought on your ranch or farm. That class begins next week. So give the OSU Extension Service a call or the JSWCD as well. That'll do it for the Real Estate Show. Thanks for being with us today, everyone. Enjoy the rest of your week. We're back here next Saturday. We'll talk about HUD-acquired homes with Diana Yates and Lori Monroe. Have a great week, everybody, and God bless. We'll see you next Saturday here on KMED.